0.25% in the green is what we see for the NSC today. The question is, how have volumes fared given the fact that we've seen quite a big drop-off in those numbers?
Volumes have reduced significantly, Elena. The reality is that there's actually no news coming out from the banking sector or from any other sector in particular to continue to drive the market. The market may have been buoyed by Guinness's numbers last week. However, I don't think that those numbers are a reflection of the broader market. The sectors that have continued to lead the market in terms of positive results has been the food and beverage and to some extent the FMCGs. I believe that that will continue to create direction for the market going forward. And as you alluded to earlier on, the banking sector, which still forms a significant chunk of the market, is still looking for direction. I think that a lot of the results coming out from the banks don't show significant improvements in efficiencies, or what we're really seeing is recoveries of bad loans. But when you look at the underlying numbers, the industry is actually shrinking.
Yeah, well, you mentioned the fast-moving consumer stocks, and of course those doing relatively well. Looking at the likes of Guinness, because they released impressive first quarter results last week. Your thoughts on those numbers, and do you think, I mean, obviously we have been seeing some nice gains coming through for those consumer stocks and anything related to the consumer at this point in time. Do you think that they're fully priced, or do you think there's still value to be found with particular reference to the likes of Guinness?
I think that the likes of Guinness are significantly approaching, I mean, very quickly approaching fair valuations. Guinness, Nigerian breweries, Nestle, to some extent probably UAC flour mills, are companies that have seen significant growth in prices as well as in results, as well as profitability most of 2010. I think that going into 2011, the market will be looking for a bit more bargain. At this point, I would say Guinness isn't a buy for me. It will probably be a hold at best, and that would hold true for so many other stocks in that sector. The reality is that for a Guinness, anyways, the fourth quarter is usually, which is their own second quarter, is usually the most active period, which coincides with the Christmas period and obviously some of the holidays that we're having, which will drive their numbers for the second quarter. However, when you look at valuations today, and relative to the rest of the market, P's have increased significantly, and I expect that in 2011 we'll see some moderation in those numbers.
Femi, you mentioned there's no real direction coming through for the banks, and it seems that we have, of course, seen some nice gains so far this year. So it seems investors sitting on the sidelines at this point in time to see what kind of impact, the real impact that AMCON is going to have on the health of these balance sheets. That said, what would you be buying and what would you be offloading at this point?
At this point in time, I would be looking for stocks that provide long-term value for the market. I don't think that it is a time to be tactical in your asset allocation. Most of the performance that we've seen from the market this year has been driven by fundamentals, with the exception of the 8 banks that were rescued by the central bank, who you could say have been driven by some level of fundamentals and probably technical recoveries. But going forward, I think fundamentals will be key. So I'll be looking for companies that can show strong growth in underlying numbers, strong growth in profitability, strong growth in turnover numbers, as well as market leadership, because that becomes extremely important as we go towards an election year. One other key issue that one wants to be focusing on was also stocks that will be impacted by the political events of 2011. So I'll still be very soft on the banks. I'll be quite long and active in looking at other sectors, FMCGs, the breweries, to a larger extent. I would also consider the cement sector, with the exception of Dangote, which I think is fairly valued at the moment.
Femi, let's touch on a topic that South Africa is really talking about extensively today. Walmart, a final offer bid for the likes of Massmart. A lot of news there, and it's really got to do with its African strategy. We know that Nigeria falls part of that stable. What has been said about this deal today in Nigeria?
I think, I mean, a lot of the information and the discussions that I've had with people, it's very, very good for Africa. I mean, the reality is that when you look at the underserved markets that we have in Lagos, it is just ridiculous. If you see the traffic that goes towards Shoprite on a weekend, it's a gridlock trying to get in and out of there. So the reality is that Africa itself, and if you ex South Africa from that, is looking for this sort of transactions. The retail sector in Africa is significantly underdeveloped, and the entry of a Walmart significantly changes the landscape. I think that it's going to be positive in the long run, because when such giant companies come in, consumers are usually the ultimate beneficiaries, because the buying power of a Walmart, the buying power of a Shoprite has brought down prices in Nigeria, and I expect that it will probably do the same thing in South Africa. So the horizon for the FMCGs and the retail sector across Africa is extremely attractive, and the likes of Walmart have just shown the way. Don't be surprised if you start to see other US retailers follow suit, and probably some of the European ones, because their own markets are significantly overbought anyways, and Africa continues to provide long-term value.
Let's also touch on the fact that the NSE is expected to extend trading hours this week. What kind of impact is it going to have on volumes? I mean, we've already said that volumes are relatively low. It seems a lot of people are going on holiday. Do you expect this to have an impact going forward?
I think it's going to have zero impact. I mean, this isn't a market that is driven by time zones. The reality is that it's only cosmetic. The trading actually happens towards the end of the market. If you follow the market very well, most trades happened in the last 20 minutes of the market. So I don't think even if you extended it by 2 days, to 2 trading days a day, it would make that significant difference. And what is important is that the quality of information that companies bring out, the quality of results, the quality of corporate governance is what will drive the market, and not cosmetic changes to trading hours.
And Femi, because you've alluded to this, do you think that a lot needs to be done to change the regulatory environment when it comes to the way that companies report and the information that they bring to the market?
And it's not just that. I mean, the reality is that when you think about the sort of comments that, for example, or the rumors that are coming out as against people questioning the performance of the Securities and Exchange Commission, that is quite worrying, because you can't say that the regulator itself also has a free hand to be able to control the market. So whilst we're saying that, look, we need results to be released more frequently and on time, and when companies fail to fulfill their listing requirements, then decisive action should be taken. That discipline means that investors who are bringing in their money into the market will be able to do so believing that the market is free and fair. And we all know that efficient markets always attract investors. If the market is efficient and people can't see transparent numbers, it will benefit the market more than anything else.
Femi, of course, you're also alluding to the local companies, the ones that aren't really associated with a multinational company, because we don't really have a problem with the way that those companies release results, but more so with the local companies. That, of course, could drive more appetite, for these big fund managers and the African funds to start including all Nigerian companies. Do you see a massive movement towards this in 2011?
I think that will happen. If you look at some of the companies, corporate governance is beginning to become a major issue. Once we're able to address the corporate governance issues around most of these companies, in addition to that, the NSE has delisted quite a number of them, and in the process of delisting, those that are not are performing in line with the listing guidelines. I think that will bring a lot of confidence, because what it would mean is that the companies that remain listed on the floor are companies that are performing and also reporting on a regular basis. That means that investors will have information to be able to analyze these companies and take decisions in the long or in the short term. That is obviously the sort of market that we're looking for, and that's what foreign investors and the index trackers are looking for as well.